Hello everyone, welcome back to Live Forex Trading Academy. I am Banjo Oluwasegun and today I will be sharing with you how to trade the SMC Order Block indicator. Now this looks a bit complex, but I'm going to try as much as I can to break down the concept of trading with order block. Now, first of all, in the concept of smart money concept, order block are institutional levels where we are expecting the market to reverse in the opposite direction, just as you can see in this particular picture right here. And so, if the market is coming down from a downtrend, order block is where we are expecting the market to turn back to an uptrend. And if the market is in an uptrend, you look out for a bearish order block, which will trigger the market to start going to the downside. All right, so but before you start trading order block, there are some few criteria that the candle which you are considering your bullish order block or bearish order block must meet in order to be considered a valid order block. Now, just from this picture, I'm going to share with you the three conditions that must be satisfied according to the SMC institution. So first is that the market must break from the previous low. So you can see that the market is breaking out from the lower low at this point. Okay, that is the first condition. The second condition is that it must break to the last lower high. Okay, so we have a break of structure to the upper side as well. So as you can see here, it will break down, it will break up. Okay, so when these two conditions are satisfied, to me, you can pick your order block. However, following the concept of the SMC, the last point for you to look out to is the fair value gap. So they suggested that to to ensure that your order block is valid, there must be a fair value gap just between this particular candle and the third candle to make sure that the institution has some liquidity they have to clear around this order block before they continue to move the market to the upside. The same thing also applies to the bearish order block. So the bearish order block in this case is the last bullish candle we have when the market is trending up. Okay, but you more want to be sure that the market breaks the previous higher high, also break the previous higher low to the downside, giving us a new lower low. Then if the market comes back to this bearish order block, you can pick your sell entry. Also, let me explain the concept of fair value gap. Now, in this picture, you can see what a valid order blocks look like and what an invalid order block look like. As I mentioned earlier, when the market is in a downtrend, the order block is the last bearish candle, and if the market is in an uptrend, the last bullish candle will be your order block. In this case, the condition that must be satisfied, like I mentioned earlier, that the last candle must stand out, it must be taken out. As you can see, we have our lower low here, and now we have a new lower low. So it must take out the previous low, and it must also break from the previous high. All right. And the last point is that it must have uh a fair value gap, okay, which is what we have here. So it must also have a fair value gap. Look at this particular first candle and look at this third candle. So there's a gap, which means the institution will want to come and clear the liquidity we have within this gap before going to the upside. All right, so look at the invalid order blocks. As you can see, this candle looks longer than the last candle. So even though this is the last bearish candle, you can see that the previous candle has a long wick that covers this last bearish candle. Also, in the case of this gap, you can see that the third candle has already taken out all the liquidity we have around this other block, and the market has already continued to go upward. So you cannot consider this as a valid order block, but you can consider this one as a valid order block if there is fair value gap. I really don't like the condition of fair value gap because sometimes you might have two, three, or more fair value gap when the market is trending. The question is now, how do you know the fair value gap to consider as the valid one that the market will respect too? And the last point I want to show you here is that the market can also break the order block. So when this happens, the market can also serve as a resistance. So the market can break the other block we have in this case, and it serves as the breaker block, which is the resistance that continues to break take the market downward. So instead of waiting for our order block to be at this point, if you remember what I explained earlier, that the order block is usually the last candle at the top or at the bottom. Okay, but sometimes the market just respect the block breaker and then continue to move in that direction from the block breaker. And as you can see, it also satisfied the condition I mentioned earlier. As you can see, it breaks to the upside, it breaks to the downside, and then reversing from the previous order block. So now I have some few more examples to show you before we go to the chart. Again, this is just to explain further what I'm the last picture I showed you, that order block can continue to go as long as the market is following the uptrend or downtrend structure. Again, remember that order block is very similar to demand and supply zone. They are really similar to each other. Okay, so you must be able to take out these distinct characteristics of order block that I mentioned earlier. As you can see from this picture as well, that this market gave us a new low, a new high, and that is when we can use our order block. Okay, so this continues to be applicable in the market as long as the three conditions that I mentioned earlier is applicable. Lastly, what a typical order block looks like. So in a downtrend, you can see this last bullish candle sometimes is also a bearish order block, because what this bullish candle means among these very many bearish candles is that there's a lot of consolidation around this zone. So there's liquidity around here that the market maker might push back to come and take off the liquidity here and continue their trend. So you have to watch out for something like this, especially if you like to trade continuations. Now let's go to the chart. So to install the indicator, you can come to your indicator and then search for market structure. So a whole lot of indicator will come up. You pick the one by nephew Sam. So when you install it, your chart will look like this, but it looks very busy. So we just do some few cleanup. So we want to see break of structure, we want to see change of character, but I don't want to see fair value gap at this point. I only want to see my order block, because that is what this video is all about. Now you can see we have a very clean chart, and as it is, you have to extend all these other blocks yourself. As you can see, these are the last bullish, the last bearish candle, which are already identified as our order block. But another setting that we'll do to this is to extend order block, delete the one that has been filled, so our chart will look like this. Okay, so I'm just going to explain this particular order block here and how you could have taken this trade following the three rule that I gave you. So the first rule is that it must break to the low. And again, you must be able to analyze this market. So this market is coming from this high, give us a lower low, a lower high, a lower low, a lower high, and then breaks through our last lower low here to give us a new lower low. Okay, and then moves up to give us a new higher high at this point. Okay, so if you follow what I explained earlier, so we have our first condition here. So we have our first condition here, which is it must break to the downside. And then we have our second condition here, which is that it must also break to the upper part. Now, within this zone, the third condition is to have a fair value gap. Okay, so a fair value gap are three consecutive candles that did not touch each other. Okay, So you can see we have several ones here. So from this high to this low, we have one fair value gap here. We have I will not consider this a fair value gap actually. So we can say we have our fair value gap around this zone. So if you want to look at what if we have fair value gap before you consider this a valid order block, you can go ahead, but I will not do that because in this case we might even have more than one fair value gap. Then confusion will come in if you should consider it or not. Now we have established the first condition, which is that the market breaks to the lower part. The second condition, which is that the market also breaks to the upper part. Then the next thing we are expecting is for the market to come back to our order block, and then from here we pick our buy signal. So this is what you can see play out at this particular time. So this is a trade for you if you want to trade with order block, and this is simply how you can use this order block indicator. Now I'm also going to go to a 30 minutes time frame to show you how you can also analyze this market in a lower time frame. Now what I explained earlier about the the first condition is that I said it must take out the last low, okay, and then also take out the last high that we have before you can consider it a valid order block. Same thing, similarity happened here. As you can see, this candlestick which we picked as our order block took out this particular low that we have here, but this is 4 hours, it will not be very much visible. So let's go to 30 minutes to see what actually happened, and we can analyze the market from there. So following the rule that I mentioned earlier, if you read your charts, so we have a lower low, lower high, lower low, lower high, lower low, lower high. So you can see that the market actually broke structure here. And remember I said the first condition is that the market should break lower. The second condition is that it should break higher. Then you pick your order block. So in this case, our order block should be the last bearish candle, which means we should be looking at, let's say, this candle, which is not ideal to be our order block, okay, considering how large this candle is. But if you remember the last picture that I showed you, that when the market is trending, it continues to give us several order blocks that we can follow and see the reaction of the market around this zone. So I will really consider this as my order block because you can see the market is taking off to give us a new high at this zone, then coming back to bounce off and continue its trend from this zone. So basically, you can pick this trade also as your order block back to the previous high. Then you have a good trade. So as you can see how we analyze this trade from what we saw on 4 hours down to 30 minutes time frame. And this is how beautiful you can trade um, order block, but you have to be very careful to make sure that the zone you are picking are not just any zone, because basically you will see a lot of order block in your chart, but you must use the condition that I established, which is the first condition to break to the low, second condition break to the high, then look for your fair value gap if it is there. I will not really look at the fair value gap, but if it is there, then you can consider that as your very last option. Then you take your trade if the market comes back to your trade. So lastly, the other thing I will just explain to you about order block is that as long as the market is in a downtrend, just like we have in this case, the market will continue to give us order block. So according to ICT, which is the inner circle trader, this is a valid order block because in a downtrend, the last bullish candle is your order block. Okay, so what you'll be expecting in this case is that the market has broken to the downside. You want the market to come back to this zone and then continue to go lower. Okay, and the last point I'm going to point out to you is that don't trade order block in isolation. Always trade order block with confluence. Use another confluence to be sure that this is what is going to happen in the market. For instance, this particular trade that I picked, I wouldn't have taken this trade if I didn't have a shark fin around this zone. Okay, so I trade with TDI shark fin is one of my best confirmation signal whenever I'm trading. So I love to see shark fin before I take any trade. So if you are new to TDI, you can search through my channel. You'll see a lot of videos on how to set up TDI and how to trade TDI and Fibonacci. Another point is that I like to see my order block close to my level 50 and 61 Fibonacci retracement level, and which are the things that give me confirmation, confidence that the market is going to reverse from that point. Also, if you look at this trade we analyze on 30 minutes, you can see that we have some bit of shark fin on the 4 hours time frame. So going back to 30 minutes, we can trade with confidence. And let's see if we have anything on 30 minutes. So on 30 minutes, oh sorry, on 30 minutes we can measure what is happening around this level. Let's see our Fibonacci level. So from this low to this high, as you can see, the market is actually coming closer to level 50 but not there yet. So let's say basically bouncing up from level 38. So you must be able to use another confluence to establish that you are confident that the market is going to move from that particular level. So I hope you are able to learn how to spot order block whenever you are trading, and this indicator is proven to be very useful, especially if you are still trying to learn how to see break of structure, trying to see order block, fair value gap, and the likes in the market. So this can help you to shaping your analysis, because one thing about this forex market is that the more you can see is the more opportunity you can take in the market. So you must be able to see all these opportunity. You must be able to see how to analyze your charts, see the highs, see the lows. If you are finding it difficult to identify the highs and lows, because I get this a lot of time, people find it difficult to know, why am I saying this is high, why am I saying this is a low, why am I saying this is high, this is high, this is low. Okay, if you are finding it confused, then you can come to line chart and then use line chart to see. So line chart will basically give you a better visual about the high and the lows in the market. Then you can start your analysis and map up your break of structure. I hope this video has been very helpful. Please kindly like, share, and subscribe to this YouTube channel, guys. I'll see you on another video. Bye.